Stock Trades on 80 Now. This is Priyanka Uppal and joining me is Snehi Shah. Markets really had a good trade today, though some gains were eroded at the later half of the day. But then markets opened at above the record high levels, holded the lifetime high levels, and clearly markets were in momentum. Global cues were very supportive. We've seen cues coming in from Nasdaq, Nikkei, and so was Nifty at record levels. In the last few minutes, however, some gains were eroded, but we still managed to close above 22,400, which were the sectors which were main performers today. Power, oil and gas, pharma, PSU bank, they were the gainers today. And of course, on the losing side was steel space, not the complete metal space, because meetings on China stimulus, which is keeping the stock buying interest in stocks alive. But then steel sector did see some damage there. Let's talk some more top stories today, talking about the Tata Steel first, because CLSA did two brokerage notes came on steel space, especially JSW Steel and Tata Steel. CLSA downgraded to sell from underperformer to JSW Steel. Tata Steel was also slightly down today. Target price was also cut from 145 to 135 on the trade. But then a good day for BHEL, Snehi, clearly 13% up in the trade today.
Well, absolutely, Priyanka. What a move for BHEL, and highest move in the last 6 months.
Since September.
Since September. So quite some move coming in over there as well. And stock did pretty well today. And this is on the back of a rumored order win that the street is expecting that BHEL will be getting from its PSU peer NTPC. But well, we'll see how this development goes ahead. So on the back of that, BHEL was up a solid 13% in trade today. Also, the other newsmakers today were PSP Projects and SJVN, both on the back of order wins. PSP Projects has bagged 2 orders up to 386.2 crore rupees. So well, that's a big positive coming in for PSP Projects, and SJVN also has won an order win of 200 megawatt solar project in an e-reverse auction. So both of these stocks doing pretty well in trade today on the back of these order wins. And lastly, let's talk about some primary action then, the primary markets, because you also have Gopal Snacks that will be making its debut, RK Swami as well as JG Chemicals. All of these 3 IPOs will be hitting the street over the course of this week. So lots of action in the main markets as well. But Priyanka, definitely action coming in the primary markets as well. And to understand more about what we can expect going ahead, let me welcome on board Mileen Vasudev, the senior technical analyst at Arihant Capital Market. And Mileen, thanks so much for joining us today and taking the time out. Help us understand this move that we saw in the market today, rather tempered in the first half of the trading session, but good moves coming in, and especially today Nifty and the benchmarks have done better than the broader market. So what's your view, and is this going to sustain going ahead?
Yeah, good afternoon. First of all, yes, Nifty is on a strong ground. And if you see that Nifty is continuously trading well above the 10-day as well as the 20-day moving average line. The 10-day moving average line is somewhere around 22,186. Again, today we made a doji kind of a pattern on the index. But definitely Nifty has got a strong support at somewhere around 22,300 22,200 levels. And we are of the opinion that going forward, Nifty is likely to head higher only. And on the higher side, we are working out with the levels of 22,600 to 22,700 levels in this in couple of weeks time. Even coming back to Bank Nifty, if you see, Bank Nifty also has got a good support around say 47,200, 4,700 levels. And again, Bank Nifty is also on a strong ground, and it is maintaining now a higher top, higher bottom formation on the daily chart. And clearly it suggests that yes, Bank Nifty is also heading towards say somewhere around 48,300, 48,500 levels. So these are the 2 levels to be watched out.
Mileen, since you mentioned, and we see clear directions, upward directions for both Nifty and Bank Nifty, so looks like you would have some buy calls for our viewers today.
Yeah, definitely. There were 2 stocks which have come to our notice. One is solar industry. Today it has gone up with huge price and volume action. Solid consolidation breakout pattern is being seen on the daily chart. Currently, it is trading at somewhere around 7,300. One can keep a stop loss of 7,100. On the higher side, 7,700, 7,900 could be possible in a couple of days' time. The second stock was Petronet LNG, currently trading somewhere around 291, 292. But keep a stop loss of 280. On the higher side, you could expect 316 to 318 in this week. Thanks.
Well, all right, Mileen, thanks for sharing your market outlook as well as your picks with us, and thanks for joining us today. With that, we'll let you go, but now it's time to slip into the Word from the Wise segment, and today that happens to be Gautam Shah, the CMT founder and chief strategist at Goldilocks Premium Research. He believes that the leadership in Nifty will come from Reliance Industries, followed by the IT space, and then followed by banks. Listen into what he had to say.
Reliance Industries. I think this is a stock which was in a sort of a range for about 18 months. Thereafter, once it took past 2750, I think a lot of the triggers on the weekly and the monthly charts became really, really solid. And I do see a 10 to 15% rally on Reliance from current levels, which will have a huge bearing, on the Nifty. And I guess it will, in some sense, keep the Nifty protected. So I think the leadership will come from Reliance. I think there's a lot more upside there, followed by the IT space, which has been in hibernation mode for the last 10 days, but the setup remains super solid. And I do see a 40,000 coming on that index as well. And banks, I think we've come to a point where maybe the underperformance could end. Our favorite remains in the form of SBI, which has been our view all along. But I think even some of the private banks like ICICI Bank and maybe an SDFC Bank at 1400 could see a bit of a bounce. So leadership can actually come from multiple places because you have IT, Reliance, and banks, all three looking good on the charts. I think Reliance is looking good for about 3250, 3300. So that's not very large in percentage terms, but given the kind of weightage that single stock has in the market, I think it's large in that context. And I don't see too many large cap stocks that could give you a clean 10, 15% kind of a move. So that's the kind of upside we are looking at.
Clearly, so Gautam clearly mentioning about the heavyweights which can perform, and leadership in fact can come from Reliance and banks also, and especially he mentioned IT space also. We'll slip in for a short break, more to come on the other side of the break. Welcome back. You're watching Your Trades, and now let's get you more action. Let's get you some action from the derivative side as well. The 6th March, 7th March expiry for different indices. But then let's see how did the active calls and puts looks like today. 22,500, there was a call writing on for the strikes of 22,500, 22,600. 22,500 seems to be a resistance right now, and we did see that 22,400 straddle also see maximum of the open interest. That is why the gains were also eroded. But one good thing about the market is right now that we've got a good support at the level of 22,200 and even 22,400 because there's a good put writing on these strikes. So that's all for derivative side, Snehi. That's the reason that we were able to close above 22,400. What's more?
Well, absolutely. Let's also take a look at the big story of the day, and that absolutely has to be the hospital space on the back of that government action that we did see coming. So, well, with the Apex Court now focused on standardizing the healthcare rates across sectors, private sector healthcare providers are now fearing catastrophic financial burdens. We managed to catch up with the managements of Narayana Health, Aster DM and Yatharth Hospital. Let's hear out their views on the same.
If you look at healthcare costs going up in this country, that is simply a factor of more and more treatments being available. The reason why people are finding it unaffordable is that you can't expect people to pay out of pocket for a lot of things in healthcare. So there are solutions that the industry is willing to propose, but without getting into draconian things like price fixing for everything. We still have a huge way to go. There still needs to be an incredible number, not just beds, but medical equipment and doctors and nurses in places where you can get treated, even in the largest cities. Forget about tier 2 and tier 3 towns. So there's a long runway of growth and demand.
Private healthcare space is an inflection point. You see a huge penetration of the organized player into the tier 2, tier 3 cities. For example, Aster Group, 70% of our beds are in the tier 2, tier 3 cities. We have only 30% of our beds in metro. This momentum should not be lost. 1A. At the same time, if the price regulation is going to help the patient, Indian patients or any foreign patients who access our healthcare for making it affordable, and then also access the quaternary and tertiary care facilities in India, what we stand out for in the global market, it's a right move to have. But at the same time, we need to be mindful of how much are we going to regulate the private healthcare players.
I think in general, regulating price rates in private sector is not the most practical situation, not the most practical solution to making healthcare much more affordable. As far as we are concerned, I think our pricing is already quite less compared to other listed players. Just advance in technology over the course of last 3 to 4 years, getting them and providing them to the patients, that's the utmost priority for every hospital. Yes, doing that in an affordable way and making the margins meet and making the capital, deployed have good returns. That is something I think hospitals are evolving in that model.
All right. That was the special edition on the blocks we did on hospitals today. Let's move forward and talk about steel stocks also, as they were in focus in today's training session. CLSA has downgraded JSW Steel and Tata Steel to sell rating. Gaurav joins in with all the details.
So steel companies are definitely going to be in focus because CLSA has now changed the target price and rating for few of the companies. So for example, for JSW Steel, they have changed the rating to sell rating and also cut the target price to 730 rupees per share. For Tata Steel, they have changed the rating to sell rating and also changed the target price to 135 rupees per share. And for JSPL, they have maintained the rating of underweight while changing the target price to 840 rupees per share. So what they believe is that the profit pool in India's steel market is going to be more towards the miners of coking coal and iron ore companies from the steel mills, because the steel capacity addition is increasing, and this is definitely going to benefit the iron ore and coking coal miners. They also believe that if you look at the valuation of the steel companies, they are actually at a higher end. So they are actually one standard deviation higher than the mean levels. While if you look at the steel spreads, they are actually at the lowest level. And this is somewhere not considered by the consensus as per CLSA. And that is why this price cut is coming up from CLSA on Tata Steel and JSW Steel. From here on, they also believe that Chinese companies, so when we look at the international market, the Chinese companies spread is also at the lowest level. And if the China production level remains elevated, and if the demand remains weak in Chinese market, this is again going to create a scenario where spreads are going to be lower for longer, and this is again going to hurt the Indian companies. And lastly, from all this pack, if you look at JSPL, they believe JSPL has an upper edge because although the industry level spreads are decreasing, JSPL's margin expansion is going to help the company to somewhere outperform the segment, and that is why they have increased the target price for JSPL to 840 rupees per share. So all in all, let's keep an eye on steel, all the steel companies, specifically on these three, and let's see how they perform in the coming days.
All right, Gaurav, well, thanks for that. JSW Steel, Tata Steel, we'll be watching out for how they continue to perform over the course of the week. But with that, let's also take a look at the other stocks that were in focus today. And what were those? Why were they buzzing? We have Ashesha joining in with that list. Ashesha, take it away.
Well, yes, first up, let's talk about BHEL. The stock was up over 12% in today's trading session after NTPC approved an investment of nearly 17,200 crores for a plant in Madhya Pradesh, and BHEL is the only bidder for this particular plant. The company later, of course, clarified that yes, indeed, it is the only bidder, but they have not formally received any communication with respect to the order. The stock, of course, was gaining over 12% on the back of this news flow. Let's also talk about MOIL. The stock was up over 7% today on the back of very strong operational data for the month of February, where they achieved best ever production in the month of February, and production stood at about 1.5 lakh tons, which is an uptick of 15% on a year-on-year basis. So very strong operational data. The stock was soaring in trade today. Next up, let's also talk about Sula. The stock was up nearly 2% after the company informed the exchanges that they've signed an agreement for a new tasting room and bottle shop, which is close to Nashik Airport. They also gave some operational data where the company said that the company is looking forward to record 2024 wine grape harvest. So operational data was also positive. The stock was gaining nearly 2% today. Lastly, Angel One, which reported operational data for the month gone by, the stock was up nearly 2%. Company's client base rose 5% on a month-on-month basis. Number of orders saw an uptick of 4%, and average daily orders saw an uptick of nearly 9% MOM. So very strong set of numbers. This counter was also gaining in trade today.
much, Ashisha. A couple of winning stocks in your list. Thank you so much. Let's go ahead and let's talk about action from primary markets. March will see a bigger buzz in primary market. At least 3 companies floating their IPOs this week. Gopal Snacks, RK Swami and JG Chemicals will raise over 300 crore collectively. Sharad joins in with all the details.
Well, in focus, we are having 3 main board IPOs which are coming. Roughly 1,325 crores will be raised. And at first is RK Swami, which the IPO is opening today itself. The IPO price band is roughly between 270 to 288 rupees per share. IPO size is more than 400 crores. And the company did raise almost 187 crore rupees from anchor investors. And marquee names include Nippon Mutual Fund as well as ABSL Life Insurance. Now, the company itself we look at is a market services company, especially on the digital marketing front. So that will be very interesting to see, especially with Affle being its competitor. And also, if you look at the second company which would be in focus, that would be JG Chemicals. That's a roughly 251 crores IPO, and the IPO price band ranges between 210 to 221 rupees per share. And the IPO is opening tomorrow from the March 5th. Now, the company itself is a zinc oxide manufacturer, which itself is a chemical company, and the applications include in the pharma as well as the agrochemical space. But that is the second company which would be coming for the IPO. The third company and in focus is Gopal Snacks. It's a larger size IPO of roughly 650 crore rupees, and the IPO opens on March 6th and closes on March 11, and the IPO price band is between 381 to 401 rupees per share. The company itself is an FMCG company that deals in ethnic as well as Western snacks. So it'll be very interesting to see 3 important IPOs coming up, and all coming from different segments this week.
Alright, Sharad, thanks so much for taking us through that. Well, viewers, with that, I'm afraid it's a complete timeout on this edition of Your Trades from Priyanka, me and the team that put this show together. Thanks so much for watching. We'll see you tomorrow at the same time.
Thanks for watching.